Wagner here just before 11 o'clock in Honolulu, before 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. 10th day of January 2014, and this is the daily report for gold and silver. After releasing a jobs report with a much weaker than expected number, we had a dramatic surge in the precious metals markets, trading substantially higher today. Gold up around $19 on the day. Current print, as you can see, is $1246.70. It has had a high of $49.20. We'll talk about that in a second. A low of $1227. Currently, as I said, trading roughly at $46.47 as we speak. Silver also up significantly, up about 3% on the day. The low 1958, the high 2036. Current print is 2013. Traders, we did recommend a very high risk trade today, and that is to initiate short positions in gold and silver. We'll talk about that through the eyes of a couple of different charts. First off, this is a 15-minute chart, Japanese average format. We actually entered the trade when I was looking at the marketplace itself. It did, after the jobs report, big surge, big rally, comes right up to 1249 as a high. And when we look at some other charts, you'll see where that number makes a little bit of sense in terms of a potential resistance area. We got these dojis on short terms all the way up to a half hour and hourly chart, and then started seeing the market go down. That's what initiated the position. Traders that took that call should be short roughly at 1245, 1245 and a half, roughly in that area. Our stop, we will talk about in a little bit, but it is above 60. We put it at 1265, and we'll talk about why that is the target area that we put our stop in, our buy stop on this current trade. We are looking at a 720-minute chart. This is in standard candlestick format. And in terms of current areas of resistance, and this is another reason that we initiated that trade, we identified resistance roughly at 1244. Now, we have another resistance point I'll show you on another chart, which puts resistance at about 1250. The market, as you can see, is just above this 1244, trading at 1246 right now. And our next real level of resistance comes in at around 53. Our stop is at 65. 65 is roughly in between these two areas. And what I was trying to account for to make sure that if the market does trade a little bit higher but then back off, we want it to be protected, because this should be absolutely ultimate short-term resistance right in here, which is this top. If we look at the body falls just around 62 or 63, and that was my reason for putting the stop at 65. Now, we are looking at a daily chart, Japanese average format. I will convert this to a standard candlestick as we take a look at the current call, which is the initiation of a short position. And this was one of the primary reasons that I felt comfortable in selling into a rally. Realize it's absolutely a high-risk trade. There's no doubt about it. But when we look at our current Elliott wave count, we acknowledged wave 4. Wave 4 was composed of our A, B, C. We went into our long wave 5. That's the count that we're currently in terms of the sub count behind it. 1, 2. I believe that we terminated 3, roughly here. And then 4. Now, 4 came right up to our resistance area. Market's currently trading at 45. You can see that this top eloquently lines up, and in fact, to get our true opens and closes, let's go ahead and convert this back to a standard candlestick chart. And of course, the big difference between a candlestick chart and the Japanese average chart is the way that they create the bodies. The bodies of the average chart are created by looking at current price compared to a midpoint, where this has a true open, low, high, and close of the current session. This being the daily session, we're looking at the continuous contract of COMEX Gold. So my sense is this: the model that we're looking at, as this market came down 3, 4 kind of banged up against this wall right here. We saw resistance just a few days ago, beginning of the week. Market then comes back down and finds support right in this area, which I believe is just at around 1220, 1221. But you can see how this particular top has lined up. We have good historical reference. This is the bottom of 1 and the beginning of wave 2. And as we talked about for our daily viewers, for this to actually be a wave 4, it really cannot go into the territory of wave 2. So when you look at the territory of wave 2, that's this low here to our high here. And then if we look at wave 4, which is the conclusion of 3, so 4 right now has got the low here and our high here, you can see that wave 4, as long as we don't really make a new high, will not go into the territory of wave 2. So it's a pretty valid Elliott wave count. So it fit pretty well into our model, and my sense is that we had this rally that began really at the beginning of this year. We did match the lows. We do have double lows right now. They're sitting roughly at 1181 and 1186. That's these sets of lows, and of course this low reached back in July. And so part of my rationale, part of my reasoning behind initiating a short position was that I am not convinced as of yet that this double bottom is an absolutely truncated bear market truncation. To do that, we wouldn't have had the kind of resistance that we had here. Now, all bets are off, obviously, if the market steamrolls through this area, and that's why we have a protective stop. As you can see on the daily chart, that protective stop is going to really protect us roughly to this area, which is 1265. Weekly chart, standard candlestick format. This has, of course, our intermediate count. When we look at the intermediate count, we're focusing right now on this last drop, wave 3. Wave 4 takes us to 1435. We get our double bottom here. Very, very important number. 1161 is a 61% retracement of this entire move. So it's really a line in the sand. If in fact we see weakness come into the market, we've talked about upper level resistance and where our stop is. In terms of support, we do have a band of support at 1221, at 1211, and then just below 1200. So if the market does find itself under pressure, we'd look to trail stops down. We would look in terms of our exit target area once, and I should say if and when the market breaks below, say 1221, we'll look to see how it reacts at 11. If it finds some support, so be it. If it doesn't, my sense is that it will probably come and make a new low. I really believe that we still have a distinct possibility to have the conclusion of wave 5, that low to be below the current low of 1181. We'll have to see really how it unfolds, but that is our basic model. We have two models that we're working off of, the truncated bear market, as well as a standard, what we call a standard zigzag, in which wave 5 has a lower low than wave 3. Now, in terms of our current silver trade, looking at a daily chart right now, this is the spot market of silver. Current print is 2009. You should have initiated, for those that are trading silver, roughly in this area, 2011. So roughly a couple of cents from here. And here's what we're looking at in terms of our support and resistance levels in silver. To me, the key is 2022, and we can see that we have a lot of resistance right in this area. And to me, the key has been really 1958. And if we take a look at it, this doesn't give us quite the range that we're looking at because we have these bottoms at 1800. But I think that we have real resistance right now just around 2025. We've put our stop at 2051. And the reason for that is I wanted to protect ourselves above these series of highs in case the market just trades through a range and then heads lower. in terms of where I would look for this market to trade, if in fact we see it breaking back down again, we would want to see how it reacts once it broke through 20. And then most importantly, this to me is that very critical area of 1958. If it breaks through there, we could see this market drift to the low $19 mark, but we first have to break through $20 per ounce. As I said, it's a high-risk trade. We'll see how it unfolds next week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.